Good morning, everybody. Cowboy here, and it is Algo Factory's Beginner Live Lab. We do this every day, and we do it at 8:30 a.m. EST. And this is intended to help people who are maybe interested in becoming traders. We kind of give out some basics here. You might already be a trader and want to know how we do things, so that's also part of what we got going on here. We do take requests. We have a private room in Telegram where our members may be asking questions. And of course, we have YouTube here where people can ask questions in the chat. And even if you're not a member, you can ask questions. Hey, what is this crypto? Do you think, what's it going to do? Or what do you think this, stock is going to do? Whatever that is. Now, we don't give investment advice, but we are willing to look at charts and just, give like an educational forecast. Now, if you are interested in what we do and you want to learn more, you can zap that QR code that you see on the screen. Okay. And or just go to that website, algofactory.tech. We got a lot of free content on YouTube. You could almost do everything that we talk about just by going through that free content. I mean, you can almost do it. It's not the same. But what we're doing is we're helping people build trading methods. They're algorithms. It doesn't have to be programmed. It's it can be a manual trading method. But what we want to do is help people get on the road to programming that, having a coder actually go and program their algorithm so that they can have it trade for you, right? So it just automatically trades. You can walk away. It's not a complete walk away. That's as much as we would like it to be. But long story short, it's something that is a beautiful eventual goal. And imagine that. You flip it on. That it's a good day to have that on. There's no whatever, because there's reasons not to run it on certain days, right? But if it's a good day to run it, which is going to be like 90% of days, you just walk away, go about your day. You can go out on the lawn, play with your kid, go to work if you have like a day job. So it's a really cool idea, and I personally do it. I have my first algo running, as a matter of fact. So I have had the indicator that I developed around that algorithm for some time, but actually programming it, hard coding it, I should say. That's actually really going on. So cool stuff. I'm going to go ahead and get rid of this QR code. So just go ahead and zap it real quick. By the way, if you're watching this on YouTube, like, subscribe, notification bell, all that typical stuff. And let's go ahead and jump into the charts. We just had three different kinds of data come out. And right now, the broader picture in the economy, right, is that they were hiking the rates because they wanted to stave off inflation. And so basically, if the economy, quote unquote, is looking good and prices are going up, then they were going to continue to hike rates. And if the economy started to show what looked like some cracks, like maybe, people start to lose their jobs, or certain assets really start to deflate, or, if you have what looks like a problem, then it's kind of almost a mission accomplished from the Fed, who, of course, the Fed is who, raises the rates and drops the rates. They're the ones who dictate monetary policy. And so whenever you have, at this point in the game, in this point in the story, if you have metrics come out that look like economy bad, then the wisdom is that the rates are going to fall, right? And when the rates fall, that means that the dollar is getting weaker, and anything against the dollar is going to get stronger. Okay, so let's take a look at what the data is as it came out today, right? So, and it just came out right now, and we're going to analyze what that looked like in the charts. Ray says in the private group, unemployment falls lower to 3.7%. Yeah, all these are green metrics, right? And I would have guessed the other way. But then again, we're in the Christmas rally. So actually, I would have probably guessed the correct way now that I'm thinking about it. But our average hourly earnings went up 0.4%. Non-farm employment change went up. Look, these green numbers, they're above the expected number. So the expected number is next to the actual number, right? And then the previous month is before that. So if the number is higher than expected, that means that they are okay, the economy is still doing well, maybe it's not time to cut rates yet, and dollar is assumed to get stronger. So people, especially in currency markets and, well, in the equities, quite frankly, are going to start, thinking, oh, man, the dollar is going to get stronger. And when the dollar gets stronger, anything traded against the dollar, like pretty much any stock or like currencies traded against the dollar, those are going to get weak, right? And these all came out better than expected. So you have higher employment change, so more jobs were added in the non-farm sector than expected. Unemployment rate dropped. So it was at 3.9% forecasted, 3.7%. And you'll notice, just looking at the AUD/USD, which is what I was watching, you'll notice that the move down is one of my favorite words is precipitous. So you had prices kind of hanging out up here. I actually was scalping some shorts last night, meaning that I was betting very low time frame, just kind of in and out in a few minutes on things headed down. And the charts did indicate that there was going to be a move down. However, I actually lost a trade a couple days ago, which won a bunch of trades this week, but I did lose this trade. I was betting on, and I hate to use the word bet, but it's just colloquial. I was thinking the price would actually continue down here, right? Meaning that the dollar was going to continue to get strong, but the market did need to head up. And this is on a very low time frame, people. This is like a 5-minute time frame. So what you're looking at is each one of these candles is 5 minutes of price action. So as the market headed back up, even though it was due for some downward movement, the market did have to head back up to do what we call a liquidity grab. So all right, cool. So let me see what we got. No comments yet. Here we go. Ray says right away, US 10-year and Dixie up significantly. Yeah, and I think that they were poised to go up, at least the Dixie. I wasn't watching the 10-year. And we talked about, kind of where things are at length. I think it was a day or two ago. We really took a hard look at the Dixie. Now, the Dixie, for those of you out there who are new and in YouTube land, what that is that's the dollar index. So we take a look at the dollar as compared to the major currencies. Primarily, it's going to be the euro, the pound, and the yen, and the Swiss franc. And I think there might be a sliver of, and I think that maybe the Canadian dollar, maybe the New Zealand and Australian dollar, but all of those things compared to the dollar is giving you an idea of the strength of the DXY. Okay. And ever since we started not hiking rates a couple months ago, we started pausing the rate hikes. A lot of countries were in so much pain from having to hike their rate to keep people interested in their currency, right? Because they were trying to compete with the US, that their economies really started to see some cracks. And so as soon as the US started pausing, you actually saw other countries being more aggressively dovish, if that's, you can say that. But another thing that's happened in the markets, besides the Dixie taking a turn during this kind of Santa rally situation that we're seeing in the markets, this kind of a time when stocks are going up, things are going up against the dollar over a higher time frame. So let me actually go to say like the daily. So all through November and so far in December, we've seen the dollar get weaker, which usually means equities are going up. And you can see that on like the SP 500 chart, the equities charts. And it's a Santa rally that we saw coming, right? So you saw the rate hikes being paused as of, let's look at the Fed funds rate. And so as soon as that populates, we'll have a look. Taking its time. Maybe I need to do this. No, maybe I didn't hit the button. Let's try it again. Fed funds. Yeah, it says it's on there. That's freaking weird. Let's undo. Okay. And let's try that again. Fed funds. We will add a new price scale. And that should make it visible. Interesting. I don't know why it's not visible. It's on there. Visibility. Who are you? Maybe I just need to crunch the Fed funds right here on the left. It's really odd. No, I can't see it. Oh, you know what? Oh, no, huh? Maybe I just need to reset trading view. Let's see what happens. Okay, back to the daily chart. Crack that open, clean it up a little bit, and we'll re-add Fed funds rate new price scale. Now, I don't know, maybe TradingView is having a problem. But I can tell you right here towards the, I think it was September and October when they started to actually do a skip where they wouldn't raise the rates, so they keep them solid. And that, of course, is a change in, it's a change in the acceleration. So instead of like raising rates, now they're pausing it. Doesn't mean they're not going to go up in the future. They're not cutting it yet. But we've had some information as to what they might be doing with cuts or hikes next year. We did have some information in the private room, and I can't talk about it here because it actually was privileged in what we call our drips. So if you're watching this and you're not that familiar with Algo Factory, V the Gorilla, who couldn't make it today, he's with us almost every morning in the private live lab, which starts 30 minutes after this, 18 minutes from now. We turn off YouTube, we go over to the private group, and we kind of get into some deeper stuff. But 3 to 5 times a month, the Gorilla, he works pretty high level. He does deals with some pretty big people, and he has a lot of good intel. And we call it the drips. And so he'll come in and he'll talk about some pretty high level stuff, and he'll tell us things that he doesn't even say for several weeks on his own channel, right? So there's, you're getting a lot of high level stuff if you're part of Algo Factory. It's totally worth it just for that. It's like paying $49.99 a month to be part of a, like a mastermind financial intel group. It's really good. And, we do have saved those videos. So we have the ability for Algo Factory members to take a look at those videos in the past as well. So the point here, though, is that we did get some clues as to what's going to happen with the rates. So we have an idea of which way the wind is blowing and whether or not this move up in the dollar or down in the dollar is going to continue. And that's always good to know which way the wind is blowing when you're trading. So let's see here. Gold and silver got slammed down. Let's take a look at that. Yeah, well, it makes sense. If the dollar just gets stronger, then gold and silver is going to slam down. And gold and silver have been really eventful lately. Let's take a look at the gold chart. There was a strong move up in gold. And if we were to back out, that line across the top is the all-time high prior. So it actually went up to a new all-time high, and it was there very briefly. So we're just going to analyze that really quick. I don't know how much I want to get into it because that is information that I don't really share. I can tell you the algo is relatively bullish on the high time frame. I can tell you that gold on a very high time frame just wants to go up. However, the West mostly, and I imagine with agreement from the East, a lot of people think that the Eastern Bloc and Western Bloc are in disagreement, but in reality, they make a lot of money together. So they're probably going to be in agreement on certain things. Now the West and the East have had some disagreements lately over certain issues. But in the end, everybody makes money, right? So they're going to want to not disagree completely. And one of the things it seems that they're agreeing on is suppressing gold, in my opinion, because gold really wants to go up. And this is going back to 2020 here, where the actual, the chart goes back to 2018, but this first high where you see that Roman numeral 3, that was the first all-time high at about 2075, and it reapproached that and was slammed back down in 2022. Did the same thing in May of this year, and for the first time, it really rammed up and got slammed down. Now, I have no idea whether this was agreed upon by East and West. I don't know, the real true dynamics, but my guess is that the West still has enough power to either push it down by themselves or to have agreement to push it down across the board. And there is incentive to do that. So think of it this way. While everybody is still using the dollar as the reserve currency, right? There's an interest in holding gold down because gold eventually is probably going to go up, but it might not be time for that yet. And as the dollar as the reserve currency erodes, as it's been eroding for decades now, Once it erodes to a certain point, there's going to need to be a new placeholder. And we have made no secret of, you know, China buys a ton of gold, actually produces a ton of gold, largest producer, largest importer, and I think largest exporter, believe it or not, of gold. China and India, their population has a ton of gold. Russia's got a lot of gold. Supposedly, the United States does, although there are some arguments that it may not be true. We're not going to get into that aspect of it. IMF has a lot of gold. European countries have a lot of gold. So your first world countries and your central banks in particular have a lot of gold. And they've been buying gold in historically high amounts starting, I think it was 2017. So if the smart money is buying gold, and the smart money started doing that now, what is that, 6 years ago, and they have continued to do so, I think you have an idea of what's going to happen with gold. Now, we don't give investment advice, but I personally, not at home, I have a family vault, but I do hold some physical metals in a family vault off premises. So it is, I personally think it's a good idea for my own investment portfolio to hold physical gold and silver as an insurance policy in the case that we do see some kind of economic crisis. So, but that's, to say if gold does eventually break above, right? Maybe we, finally get to a point where the dollar has eroded to that degree, then I think we're going to see some stop-off points. And these are just basic estimates, because now once price goes above an all-time high, prices it has never ever historically seen, you're now in what's called price discovery. Okay, so and the only way to really try to guess what might happen with price discovery, there are a couple of ways. One of them is going to be quantifiably. So you're like a quant, maybe you have an understanding of economics, maybe you're using some economic data, and that's not necessarily what we do here, although I have some knowledge of that. But what I do actually is I'm going to do it technically with fib levels, right? So Fibonacci extension to be specific. So I'm going to rebuild the chart that you see right now. Okay. And there's a couple of ways to go about this. There is a chart pattern that gold has created. It's called a cup and handle. It's a little bit skewed. It's not perfect, but then again, so I don't know that I want to rely on that completely, but I will demonstrate the cup and handle as it is and as it should be, right? Two different things. So let's talk about the cup and handle pattern. Okay. Now, cup and handle pattern, just my opinion, high time frame, not a bad thing to use. When you get to low time frame, it's still not bad, but when it comes to like smaller assets, cryptocurrencies, things like that, those kind of chart patterns can be manufactured. I'm not saying for sure that it happens, but I've seen so many of them fail on the on smaller assets with people who are looking for cup and handle, because it is kind of a newbie formation, right? And a proper cup and handle would have had price go all the way up to about here and then form your cup, and your cup would look like this. Okay, and then the bottom of the cup is the low point of the move down, and then you have give me 1 second here. Sorry about that. Then you have your handle, and your handle is going to look like this. Okay. And then the low point of this, it doesn't have to be this perfect arc, just, needs to come down. And there's people with different opinions on that. But I do have certain requirements. I want the handle to be no more than 50% of the cup. And some people say 30% or 33%. 50% I think is fine. And the story that price would be telling, now, it didn't exactly happen like this. As you can see, price actually didn't form that left part of the cup so well. So the thing is, though, is that you're talking about a 10-year span of what's happened here, and the market has changed drastically, fundamentally in that time. So we could argue that that fundamental change has distorted our cup, and the cup is still valid, right? So I mean, it's an argument, but there are better ways to handle that, and we'll get into that. So for now, though, we'll go on the cup and handle, and we'll see how I would normally measure that, right? So if this cup and handle were, let's just say I were going to handle it this way, or if it did properly form, I would use a fib extension tool. Okay. And I would start at the top, go down to the bottom of like the apex of the handle, and I move out to the side and go back to where I started. I screwed that up. Hold on. Sorry about that, folks. I would start at the apex, head to the cup rim, and then back down. Sorry about that. And those are fib levels, right? And so price tends to go to these fib levels. Now, I don't know if it's some magical thing in the market. I don't know if it happens. It's like a self-fulfilling prophecy. Everybody's looking at fib levels. You know, it's really hard to say, but there's no price history to base what might happen next, right? I mean, this goes all the way back to 1833, and there's no time the price has ever been as high as it is right now. So all we can really do is try to maybe use fib levels or, you know, some other quantifiable method, like I said. So that means that if this cup and handle were to break out, then chances are it would either reject at these fib levels or make like a stop and then go past, or they might even break above, and you know, so they could just go straight through. They don't necessarily have to stop, but this is a pretty long time frame move, and you know, this could happen much more quickly than what I just drew, because I have this going out to 2028. You know, if something were to happen, like, you know, I don't know, some kind of crazy wars, or I mean, this could shoot up instantly. In fact, one of the things to understand, like on 9/11, for a short time, gold became literally priceless. No, you know what I mean? Like on the exchanges. So, but you know, you could see something like this happen, and the height of this is about $3,000, and then the main stop off is going to be around 2650. That's your 1.618, which is your most common fib level for price to go to. And then you have your 1.272, which if the move isn't that strong, it could reject and head back down. But my opinion is that once gold breaks above this kind of all-time high area and stays above it for, say, a month, then, or even a few months, then we have a chance at this being the actual breakout of this, you know, decade plus long pattern, right? Okay, so the cup and handle itself was not a perfect form. So what do we do instead of that? Well, I could use a similar strategy with this impulse up. Okay, so instead of going from this bottom here, which you could go from the bottom here, right? It could just, you can look at this as just one complex move up, right? Let's just do it that way. Keep it simple. I would start, let's see if I remember to start at the beginning. I have a different tool for this. I don't actually use the fib extension tool. I modified my fib so I don't have to use that tool. But if you don't want to modify your fib, this is how you do it. You start at the beginning of the impulse, you go to the end of the impulse, and then you go back down to the beginning of the impulse, right? Just like we did with the cup and handle. And you'll get the same exact result because that was the bottom of the cup, right? So, you know, that's going to have the same result, and you don't really have to think about cups and handles and anything else. But this concept of price impulsing up and then taking a quick pullback like this and then continuing up, that shows strength, because the bulls, and this is the story is being told, the bulls were pushing up to a point, the bears took over, and then the bulls took back over down here. So price went up to, you know, about 1900, a little higher. Bears kicked in, took price back down to about 1,000. Bulls kicked back in, took price up to about 2,000, really. So basically that same area. And the bears fought back, but the bears are getting tired, right? The bears are only able to push price down so far. It's a tug of war. And it's a tug of war where the bulls are getting stronger and the bears are getting progressively weaker, okay? It's almost like an Adam and Eve pattern as well. So you can always go to Google, you can look up cup and handle pattern, right? Trading. And it'll give you some examples. Let's zoom in just a tad. So you got, you know, your cup and handle right here. So you see how price kind of bulls down, and then you have your move down and then up. Here's your cup and handle right here. And they're looking at it as a bull flag scenario. for the handle. I like to see price break above the cup before I'm interested in the trade. Yeah, but a lot of people are just they'll trade that bull flag breakout. So the thing about trading, you'll notice, is that a lot of the time people do their own kind of version of things. So, here's one. This is more like what I would do. Cup, handle, breakout, retrace, grab it on the retrace, right? So that's how I would do it. But a lot of people are actually doing it I'll show you on the chart. A lot of people with their cup and handle are going to treat this. Let me just bust out the arc here. All right, so we'll pretend that we have a proper cup and handle here, and they're going to treat this as a bull flag. They're not going to worry about the breakout. They're going to kind of have it like, oh, this is a flag, and we're going to maybe catch the bottom of this flag, or they'll wait for a flag breakout. But I like to personally see price break above this handle before I'm interested, because then you might get like what we saw here so far is a rejection, where price tried to break out of this flag, but then got rejected and crushed back down. So the only way to know what's best is to take whatever asset you like to trade and then back test it to see how the cup and handle behaves on that whole asset, right? So, and that's what we do at Algo Factory. We teach you how to go back, test it, gather the numbers, look at how things actually behave, and make your plan based on that. It's called the scientific method. So, Joseph, thanks for the kind words. And we are now at the end of the private group. I'm sorry, of the public live lab, and we're going to roll over to the private group. If anybody has any comments and you're watching this after the fact, feel free to leave your comments or even questions in the comment section, and I'll get back to those and answer them. If you say, hey, can you do a chart on this, that? If the private members don't have any questions, and as today they're rather quiet, I can do that for you. I can chart for you like that. Or if you just come on live and ask live, I can do that too. So thanks a lot. I'm going to flash that QR code one more time. Come check us out. We are grossly underpriced. As a matter of fact, we're about to do a marketing push, and when Algo Factory has a certain amount of members, we're actually going to have to raise the price because we got to hire staff and things like that. So, if you get in at $49.99, that tier of membership is not going to change. That price will not change for you. We will grandfather in that price. So if we go up 2, 3, 4 times what it is now, you will still keep that price as long as you don't let your membership lapse. So that's that. And much love to you all, and we will see you on Monday.